you could be like the absolute best carpenter in your state.
Oh,
I
absolutely.
mean, you could have flawless joints, perfect framing, an eye for detail that rivals master craftsmen from a century ago.
Right.
And honestly, none of that will matter at all if you don't know how to file a BOI report
Yeah.
or, secure a surety bond.
Yeah, it's a really harsh reality check for a lot of incredibly talented tradespeople.
Totally.
We tend to romanticize construction, right? We look at a towering skyscraper or a sprawling residential development, and we just assume the person running that site got there simply because they're, I don't know, the fastest welder or the most precise framer.
Yeah, the best with a hammer.
Exactly. But the truth is, moving from swinging a hammer to actually running a legal construction business is, well, it's a transition into a completely different profession.
Which is exactly what we are focusing on today. We are
Yeah.
doing a deep dive into a comprehensive guide titled Getting Started on Your Path to Becoming a Licensed Contractor.
It's a great resource.
It really is.
Yeah.
So for anyone looking to take that leap, and start their construction career, we are mapping out the essential steps. We are looking at why the legal authorization to run a project has, well, less to do with your physical building skills and everything to do with surviving a financial and legal minefield.
A minefield is a good word for it.
Right. Okay, let's unpack this. Because when you dig into these materials, the overarching theme really seems to be risk management.
Oh, 100%. The state isn't testing whether you can build a structurally sound wall.
Right, they kind of figure you can already do that.
Yeah, they assume if you've been in the trades, you probably have those skills down. What they really want to know is whether you can manage an entire business ecosystem without it collapsing.
Taking everybody down with it.
Exactly. Taking the client, your employees, the local supply chain, they want to make sure you don't drag all of them down too.
So let's start with the sheer mechanics of why this license is so critical. Because looking through the source, I mean, it goes way beyond just a generic warning about staying out of legal trouble.
Right. It's much bigger than that.
It dictates what kind of jobs you can even bid on.
Yeah,
Right?
absolutely.
Like a license is essentially the threshold for entry into commercial work or government contracts and really any large-scale project.
Yeah, without a license, you are entirely locked out of the professional tier of the industry. The guide outlines how licensing provides this fundamental legitimacy.
Which you need.
Right. It's what allows you to secure insurance, pull major permits, negotiate with larger organizations, but more importantly, it creates a structured environment of accountability.
Okay, accountability to who exactly?
Well, the licensing board exists to protect the public from dangerous building practices, obviously, but it also creates a massive structural advantage for the contractor.
Yeah, I was trying to visualize this. And
Yeah.
instead of looking at the license like a framed diploma on a wall
Right.
or like I think of it as a VIP all-access pass.
Yeah.
Without it, you are locked out of the biggest venues like those government contracts, and you're just left playing acoustic sets in the parking lot.
I love that analogy. You're stuck in the parking lot.
Exactly.
Yeah.
It's a financial firewall.
Yeah.
On one side of the firewall is the client's property and your own personal bank account.
Yes.
And on the other side is the incredibly chaotic reality of a construction site where, honestly, things go wrong every single day.
That is a highly accurate way to frame it. And if we connect this to the bigger picture, an unlicensed contractor who makes a catastrophic mistake,
Like what?
say they hit a main water line and flood an entire commercial property.
Oh, wow. Yeah, that's bad.
That person is facing direct personal legal exposure. They don't have the legal entity or the mandated protections to absorb that blow.
So it's all on them.
Completely. Their personal livelihood, their home, their savings, it's all instantly on the line. The license and the corporate structure it requires builds that firewall you mentioned. It ensures that a disaster on the job site doesn't completely burn down your personal life.
Man, okay. So assuming you want that firewall,
Mm.
you want to operate legitimately and tackle the big projects,
Mm.
the guide lays out the process. And the initial phase is defining your scope and proving your eligibility to the state.
Step 1 and 2.
Exactly. You have to pick your classification. So general contracting, plumbing, electrical, HVAC, which is, fairly straightforward. You define your lane.
Yep.
But then I hit the actual eligibility requirements, and I have to push back on something that seems completely counterintuitive for a builder.
Oh. What stood out to you?
The financial scrutiny. I mean, the state requires applicants to provide proof of financial stability. They want to see operating capital, credit reports, proof of assets.
Yes, they do.
And I'm just thinking, if I have spent the last 10 years perfecting my skills as a commercial roofer, Why does the state care about my credit score?
It does sound a bit weird at first.
Right. My ability to lay a watertight roof has absolutely nothing to do with my personal financial history. It feels incredibly disconnected from the physical reality of the job.
I hear that all the time. It feels disconnected until you examine the underlying economics of how a construction project is actually funded. Because unlike a traditional job where you perform a task and then receive a paycheck at the end of the week, the cash flow in construction is almost entirely inverted.
Inverted? Wait, inverted how?
Well, think about the timeline of a massive renovation. Before a single nail is driven, a licensed contractor has to float a tremendous amount of capital.
Oh, I see.
They are purchasing tens of thousands of dollars in lumber, steel, concrete, all up front.
Right. The client hasn't paid for all that yet.
Exactly. And they are committing to a payroll for a crew of 10 people. They're renting heavy machinery. They're putting down deposits with specialized subcontractors.
Well, that's up fast.
Very fast. All of this money is flowing out of the contractor's accounts weeks or sometimes even months before the client makes their first major progress payment.
Okay, when you lay it out like that, it sounds terrifying.
Yeah.
You are essentially a high-risk financial manager who just happens to specialize in drywall.
Precisely. You are managing massive high-stress budgets. So from the state's perspective, if you have a history of bankruptcies or a terrible credit score, that signals a high risk.
A risk that you might just run out of cash.
Exactly. A risk that your business could fold under the immense financial pressure of floating a project. The worst-case scenario for a state licensing board isn't just a crooked wall.
What is it?
It's a contractor running out of money halfway through a job, leaving a family with a torn-up foundation, half a roof, and completely drained savings.
Well, it is a nightmare.
It happens. So the financial requirements basically prove you have the resources to absorb the natural cash flow shocks of the industry.
Wow, okay. That dramatically shifts the perspective. You aren't proving you can build, you are proving you can fund the build.
Yes.
And you still have to prove your experience too, right? The guide is very clear that you need documented, verifiable experience under a licensed employer.
Right. You can't fake it.
You can't just count the time you spend building a shed in your backyard or doing off-the-books handyman work for your neighbors.
No, definitely not. The experience has to be verifiable because it leads directly into the next phase.
Which is the exam.
Exactly. The educational requirements and the licensing exam. The hands-on experience is simply the prerequisite to even sit for the test.
Here's where it gets really interesting, because the exam itself is another place where expectations completely clash with reality.
How so?
Well, I read through the breakdown of what the exam covers, which, by the way, is administered by the state or a third-party agency. And I think most people assume a contractor's exam is going to be this grueling test on structural engineering.
Right, load-bearing calculations and all that.
Yeah, or like the best angle to drive a framing nail.
The technical trade knowledge is certainly tested, but it is rarely the focal point.
It's barely a quarter of the exam in many cases.
Yep.
Based on our sources, the vast majority of this test is heavily weighted toward the office side of the job. It's testing business law, complex labor regulations, tax codes, rigid construction safety protocols.
It's a lot of paperwork.
It is. I have to admit, seeing that 75% of the exam is just law and safety feels a bit disproportionate. I mean, shouldn't we be primarily testing if these people can safely wire a house without burning it down?
You would think so, right? But the state assumes your documented years as a journeyman electrician already cover the physical wiring aspect.
Ah, okay. That makes sense.
What your apprenticeship didn't necessarily teach you is how to navigate a workers' compensation claim if your apprentice falls off a ladder,
Oof.
or how to legally draft a change order when the client suddenly decides they want the kitchen island moved 3 feet to the left.
Which happens constantly, I'm sure.
Oh, all the time. The exam is disproportionate because the liability is disproportionate. A mistake in wiring might cost a few $1,000s to fix. A mistake in labor law compliance can result in a multi-million-dollar lawsuit that shutters the business permanently.
That makes the leap from employee to employer so much starker. You are essentially learning an entirely new language.
You really are.
You're fluent in blueprints, but now you have to become fluent in the language of liability, contracts, OSHA regulations.
Which highlights the immense value of formal apprenticeships and trade school programs over just, learning on the job.
Right.
The guide points out resources like the Small Business Administration, the SBA, and various specialized contractor associations.
They help with the business side.
Exactly. A great apprenticeship program doesn't just teach you how to bend conduit. It actively bridges the gap between the abstract textbook business law you need to pass the exam and the actual job site realities you face.
They make it real.
Right. They teach you how those rigid legal rules apply when you are standing in the mud with a delayed material shipment and an incredibly angry client.
Okay, so let's say you've put in the years. You've proved your finances won't crumble. You've passed the exam and proved you understand a legal landscape.
You're doing great.
But knowing the law doesn't pay for that broken water main we talked about earlier.
No, it doesn't.
This brings us to the financial safety nets, which the source mandates before you can even operate. I call it the triad of protection.
The triad. I like that.
Yeah.
General liability insurance, workers' compensation insurance, and a surety bond. These are non-negotiable in the professional tier.
Let's actually break the mechanics of this triad down because insurance is such a blanket term that people's eyes tend to glaze over.
It can be dry for sure.
I find it helps to look at exactly who each of these safety nets is designed to catch. So the first is general liability insurance. The mechanism here is protecting the bystanders and the physical property.
Right.
So if you accidentally drop a steel beam onto a parked car or a neighbor walking past the site trips over your equipment, general liability steps in to cover that property damage or bodily injury.
Perfect. Then you have workers' compensation insurance, which protects your internal team.
Your guys on the ground.
Exactly. If you have employees, or often even if you just utilize specific subcontractors, you need this to cover their medical expenses and lost wages if they're injured while working on your site.
Which is huge.
It is. It guarantees that a worker isn't left destitute because of a workplace accident, and equally, it protects the employer from being personally sued for those medical costs.
But the third one is the most interesting to me because it's not standard insurance. The surety bond.
Ah, yes.
This protects the client's wallet, but the mechanics of it are entirely different from an insurance policy.
They are very different. Insurance is designed to cover the cost of unpredictable accidents. A surety bond, on the other hand, is a financial guarantee against your failure to perform.
Wait, walk me through a real-world scenario of how a surety bond is actually triggered. I need an example here.
Sure. Imagine you are hired to execute a massive $500,000 commercial build-out.
Okay, big project.
Right. You hire a specialized subcontractor to install the commercial HVAC system. The subcontractor finishes the work, but for whatever reason, maybe you mismanaged your budget or you had a dispute, you fail to pay that subcontractor.
Okay, so the subcontractor's out, what, 50 grand? What do?
They file a mechanic's lien against the property. Yes. This means they are legally attaching the debt to the client's building. So the client, who already paid you in full for the project, suddenly finds out their property has a lien on it because you didn't pay your bills down the chain.
Oh, wow. So the client is essentially being held hostage for a debt they thought they already settled? That is wild.
Exactly. And this is where the surety bond kicks in. The bond is a pool of money held by a third-party surety company. If you fail to fulfill your contractual obligations, like failing to pay your subs or just walking off the job entirely, the client can make a claim against your bond to recover those lost funds and pay off the lien.
And make them whole again.
Right. The bond ensures the client isn't left holding the bag for your operational failures.
But here is the kicker, and this is why the triad is so crucial. The surety company doesn't just absorb that loss like an insurance company might, right?
No, they do not.
If they pay out a bond claim to your client, they are coming directly after you to recoup every single penny. It is a guarantee of your performance, not a shield for your mistakes.
That's a vital distinction. And what's fascinating here is how deeply intertwined this is with the license itself.
Because you can't have one without the other.
Exactly. In almost all jurisdictions, the state board will not finalize or issue your license until you provide proof that these specific policies and bonds are active.
Wow.
The state uses the licensing process as a choke point. They are effectively saying, we have verified your knowledge, but we will not let you touch a project until we have proof you can financially cover a catastrophe.
Man, it really is the final brick in the firewall. Which brings us to the last phase outlined in the materials. We've conquered the experience, the exam, and the insurance. Now we hit the red tape marathon.
The paperwork.
The endless paperwork.
Yeah.
The guide includes a section at the end titled the Startup Checklist Summary. And instead of just saying, fill out your paperwork, it itemizes the actual administrative tasks required to birth a company into existence.
It's a dense sequence of legal maneuvers. It really takes the very abstract, intimidating concept of starting a business and translates it into state and federal compliance.
So what does this all mean? I want to focus on a few of the heavier items on this list because it's a barrage of acronyms.
It is alphabet soup.
Yeah. It mentions choosing a legal structure like an LLC, filing articles of organization, getting an EIN from the IRS, filing a BOI report. Let's look at the LLC first.
Okay.
Why go through the hassle of filing articles of organization with the state to create a limited liability company?
Right.
Why not just operate as an individual with a really good insurance policy?
Well, because an insurance policy has limits, and it has exclusions. Operating as a sole proprietor means there is zero legal distinction between you and your business.
Right.
So if a catastrophic lawsuit exceeds your general liability coverage, say a structural failure causes millions in damage, the plaintiffs can come directly after your personal assets, your house, your kids' college funds, your retirement.
Everything is on the table.
Everything. Forming an LLC creates a distinct legal entity. It separates John Doe, the individual, from John Doe Construction, LLC.
A completely separate thing in the eyes of the law.
Exactly. If the business is sued, generally speaking, only the assets owned by the LLC are vulnerable. It's called the corporate veil, and it is the ultimate realization of that financial firewall we've been discussing. The articles of organization are simply the formal documents you file with the state to legally conjure that protective entity into existence.
Okay, the LLC makes perfect sense for asset protection. But I have to ask about this BOI report.
The Beneficial Ownership Information Report.
Right. We are talking about pouring concrete and framing walls here, not international banking. Why is the federal government suddenly getting involved in a local contractor's business structure? It feels like massive regulatory overreach.
It can certainly feel that way to a small business owner, I get that. But you have to view it through the lens of the broader industry.
Okay.
Construction is an industry so incredibly massive and deals with such vast sums of money that it is historically a prime target for hiding financial maneuvering. Governments and large commercial clients want to know exactly who is profiting from, say, a multi-million-dollar public works contract.
Oh, I see. They want to know who is really pulling the strings behind the LLC.
Exactly. The BOI report is relatively new federal legislation designed to combat money laundering and tax evasion. It requires the business to disclose exactly who the actual human beings are that own or control the company.
So you can't just hide.
Right. It prevents bad actors from hiding behind layers of anonymous shell companies to bid on lucrative state projects or avoid accountability for fraudulent practices. It's about creating total financial transparency in an industry where opacity can be incredibly dangerous.
So really, every step of this checklist, getting your EIN to process payroll taxes, registering your DBA or doing business's name, checking the local zoning laws, it's all about integrating your specific skill set into the larger grid of the economy.
That's right.
You are hooking up your business to the tax grid, the legal grid, and the regulatory grid.
That is the perfect way to summarize it. You're transitioning from a standalone tradesperson into a recognized node within the economic system.
A node. I like that.
However, it's critical to note that while this checklist provides an excellent framework, the specific forms, the exact sequence of filings, the fees, they will vary wildly depending on where you operate.
Oh, sure. State by state.
Exactly. The source heavily emphasizes that researching your specific state's licensing board, like the CSLB in California or the DBPR in Florida, is the ultimate key. The state board is the final arbiter of what you actually need to submit.
You definitely can't just guess your way through filing articles of organization.
Definitely not.
The level of meticulous detail required just to get to day one of your new business is staggering. So to recap the journey we've mapped out from these sources,
Let's do it.
you don't just start a construction business. You begin by spending years proving your hands-on experience and demonstrating extreme financial stability.
Right.
You pivot to pass an exam that rigorously tests your grasp of business law, liability, and safety protocols far more than your ability to swing a hammer.
Yeah.
You then have to secure a complex triad of general liability, workers' compensation, and surety bonds to protect the public and your clients. And finally, you navigate a maze of federal and state paperwork to construct the legal entity that shields your personal life from the chaos of the job site.
It is a remarkable transformation. And examining this rigorous pathway, this raises an important question, something to consider long after we finish analyzing these sources.
What's that?
The material makes it undeniably clear that operating as a licensed contractor today requires you to be part lawyer, part accountant, and part risk manager.
Very true.
So as construction technology advances and as building codes, environmental regulations, federal reporting requirements become even more incredibly complex, will the contractors of the future even be considered tradespeople in the traditional sense?
Oh, wow.
Or will they be viewed primarily as specialized legal and financial project managers who simply happen to work in the medium of concrete and steel?
That is a fascinating shift in perspective.
Yeah,
It fundamentally changes how you view the person wearing the white hard hat on a job site.
it really does.
They aren't just the chief builder. They are the chief legal officer, the chief financial officer, and the ultimate risk manager for that specific piece of land. It is a monumental undertaking.
Truly monumental.
Well, we hope this deep dive helped clear the muddy waters of the licensing process and maybe gave you a new appreciation for what it takes to run the show. Keep learning, stay curious, and if you are ready to take the leap, start tracking down your own state's checklist. Until next time.